Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and today once again I'm joined by my brother Brian and partner at As Good as Gold, and today we interviewed John Adams, Chief Economist at As Good as Gold Australia. Good morning, John.
Good morning, Darryl and Brian. How are you today?
Very well, thank you.
Fantastic. Good morning, John.
I should say welcome back, John. And because I say that because we haven't spoken for some time so far as an interview is concerned. And there's a story behind that. And we're going to get into that in just a moment. But I thought first what I would do, I share another story with our viewers. One that I didn't really surprise me, but I was surprised that mainstream media reported it. But this was of a gentleman who was sentenced to a jail term going back around 30 years ago. And he broke out of Grafton jail, apparently hacksawed his way out, and had been out in the community for something like 30 years, almost 30 years. This was just after he'd served a portion of his sentence. So police have been looking for him, haven't been able to find him. He's been operating as a handyman at a township called Avalon, or a suburb, Avalon, which is a northern Sydney suburb, and getting along pretty well. Had a house that he was living in, was earning reasonable money, and was quite comfortable. But then, of course, COVID came along, and the lockdown process started, and he ended up not being able to find the type of work that he was used to. He lost his house, and he ended up living on the side of the road, like on a park bench. So he was rather distraught, made a decision to go to the nearest police station and knock on the door and admit himself back into prison. And this seemed to be quite amazing to the police in charge at the time. And they asked the question, why did you do that? And he said, I ended up with no money through lockdown, no money, I was destitute, sleeping on a park bench. He said that nothing could be as bad as that. So I thought jail with 3 square meals a day and a bed of my own and a roof over my head was better than being in lockdown.
Unbelievable.
Right, so I think this is a pretty good indication. He's not on his own. There would be a number of people out there at the moment that would be finding the harsh rules that we have with lockdown taking control of their lives. Not a good position to be in at all. In fact, your story, not a lot dissimilar to that. And so I'd like to share this with the viewers, that John had a major experience until just recently. The Australia that we know and that we've loved for so many years seems to be changing quite dramatically, and not for the better, of course. The Delta COVID-19 outbreak has shown that governments of New South Wales and Victoria have embraced totalitarianism. With the current lockdown, it's been dragging on now for something like 2.5 months. Now, recently, John, you and your family were placed under house arrest by the New South Wales government and you were deemed close contacts. So if you could share with our viewer or our viewing audience, what has been your personal experience, or what's it been like on the front line of the lockdown?
So the last 2.5 months has been tough for, we have about 8 million people in New South Wales, but in the Greater Sydney region, we've got over 5 million, maybe 5.5 million. And it has been extremely tough for millions of people in my state. Initially, this was going to start at 2 weeks, a 2-week sharp lockdown. Then it went into 4 weeks, and then we got to the end of July. Then it's gone into, so we'll be doing it for another 4 weeks until the end of September, until the end of August. And now it's we're dragging this all in until we hit certain vaccination targets. And if we don't hit those targets, the way our Premier is speaking is that we're going to be in lockdown for perpetuity. So small business in terms of my state has been smashed. A lot of people are facing it very hard. And obviously the context, the economic context is largely what we've been discussing to date in terms of the biggest household debt bubble in Australian history. So a lot of people haven't got their finances squared away, and that's caused enormous amounts of distress. Even though there are some government payments on offer, it's nowhere near enough to actually help people get through this in terms of this transition. So we're going to talk a little bit about the economic impact, but the more important impact is, I think, on civil liberties, on the freedoms that we have come to expect and understand that Australia is, without going to an election, without any form of public consultation, without even any parliamentary debate. We've had the New South Wales government in particular basically sign away all of our rights using a whole host of laws. And expect that the public will follow those laws. So a few Fridays ago, there was COVID-19 detected at the childcare centre that my daughter is at, and we were told the following Tuesday that we had to pick up our daughter because of COVID. So we did, and we went. So we weren't told to go get tested, but we anticipated we would have to. So we got tested, came back negative the following day. So we thought we were all good. And then later that evening, we got a phone call from the New South Wales Health Department saying that we have been deemed close contacts, and we were required to self-isolate for a week and a half, and to go for a mandatory test on day 12, and if we didn't, we would be extended for another 2 weeks, and if we left our home, we would be subject to monetary fines and arrest. So that was a particularly challenging period where you've got two little kids, and that you just have to sort of stay indoors or just stay in we've got a relatively small backyard, so we did go in the backyard a little bit, but largely we couldn't sort of move, and we had because the policy has gotten out of hand in New South Wales, whereas, for example, I believe in South Australia, where you guys are at, the health department do the compliance checks to make sure that people are complying with these lockdown rules, self-isolation, quarantine, etc. The health department is overwhelmed in New South Wales, and the police and the military have been doing the compliance checks. So we did have the police come around and to make sure we were self-isolating, we were in the home, and we were, and they did a routine check. Is everything okay? Is everyone sick, or is everyone healthy? And we answered all those questions. And but that they did have. They did sort of drop some information on our front doorstep about the current rules and the risk of COVID, etc. And but the police were in their full uniform with weapons, firearms, tasers, handcuffs, and obviously, had I been in the front of my home when they came around to do their compliance check, I would have been subject to arrest. So I think a lot of people in my state have found this whole policy to be very confronting, because it's not what we're used to, and things have just dramatically changed within weeks. Look, a lot of people have found that very hard to adjust, and there are ways to combat that, through the courts, in terms of trying to engage politically on social media and to some extent the mainstream media. And obviously in the New South Wales, we don't have a state election for another 2 years. So, there are limited ways that we can try to show our displeasure and our disagreement with the policy. But, if we're going to follow the level of law, we have a full-on totalitarian regime here in New South Wales under the guise of a pandemic. And there's a lot of people questioning both professional scientists and others as to is the risk of COVID-19, is it sufficiently high to warrant the policy response? It seems to me that the policy response is disproportionate, and it's causing more harm than benefit. And that's why, funny enough, the World Health Organization are against lockdowns, because the economic impact, the psychological impact, the social impact, the impact on children being out of school, the impact on religious people not being able to go to their house of worship. There are huge impacts across society. Now, because of the work I do with As Good as Gold, and because of the research I've been doing for the last few years on the economy, I've taken a number of precautions to give myself sufficient buffers so that we can get through a hard period like this, and financially we're fine. But there's millions of people in New South Wales who are not fine, but also people in Victoria, and when you have financial pressure on top of other forms of pressure, that causes a very toxic cocktail for a lot of people.
Are you suggesting to me, John, because it's not clear to me, were you? Do you have a mailbox in your backyard? Because you're not allowed out in your front yard. So how does one collect their mail?
Well, you're not allowed. So if you are, so the theory goes is that the reason in New South Wales you have to self-isolate for 14 days is that's the incubation period of the virus. And there have been some instances in Sydney where someone may be come into contact with COVID, get tested early on, comes back negative, but by day 12, 13, 14, you actually become positive. So that's why they basically tell you to self-isolate for 14 days from the point of contact, and to go get a test on day 12, just to make sure that you haven't developed COVID in the later part of the incubation period. But all of those sort of things. Now, we did have a support network. We had people come around and drop us food and try to do all those sort of things that to keep the household running. The order to self-isolate creates enormous difficulties, particularly when you've got young children who need to be sort of educated, and children, particularly 7-year-olds, need to be out and running around and expending energy, etc. And so when they're not, that creates tensions and stress that normally households don't face.
Wow. I mean, the rest of the world finds this really difficult to believe, don't they? And I've noted today Victoria have opened up a little bit. They have more freedom now, in particular for the vaccinated.
Well, then go to their letterbox, can they?
Yeah. I know that they can have a picnic with 5 people, five people at a picnic, but if you're unvaccinated, you're only allowed to have 2 people at the picnic. I mean, it's not bad, is it? Increased exercise limits, allowed to travel 10K from their homes now, can you believe it? Plus outdoor gyms will reopen. And you think, you've got to be kidding me. For those who have seen Oliver Twist, please, sir, can I have another bowl of soup? Mm. And the answer was no, but that was just limited to that particular environment, the house that he was living in. This is Australia, isn't it?
Yeah, look, absolutely. And it's Australia-wide.
Yeah, I mean, if you're living outside of Australia, you couldn't believe what we're going through at the moment.
One point that I'll probably make, Darryl, is perhaps for a lot of people in my state, it's been very concerning. Is that the Premier has continued to say that you will get your freedoms back if you do this, if you do that, but if you don't do them, you won't get your freedom back. And for a lot of people, we've all been scratching our heads thinking, well, who is it for you to determine which freedoms we can have and which freedoms we can't have? So obviously the first fleet came into Sydney in 1788, and Governor Arthur Phillip at the time basically was able to tell the convicts what freedom they could have and couldn't have, and yet that whole penal colony system continues to today. So whereas, for example, in America, going back to the Declaration of Independence, rights and freedoms come from the Creator, and it's not for government to dictate what freedom you can have and you can't have. And yet the way the Premier is speaking, it is very much similar to how the early English governors used to speak when they came to Sydney.
Incredible. John, before I ask this next question, I'm just going to talk about a film clip that I saw. That David Morgan, who is our advisor from the United States, he sent me a film clip, and it was a TV host. It was a TV program, like good Today Tonight type situation. And in this particular film clip, they were showing in America, they were showing clips of what was happening in New South Wales and Victoria, for that matter. And the title that the presenter gave it to at the end was "Australia Has Fallen." And if we all remember a film, I'm not quite sure of the actor, I can see his face, but I think it was Washington Has Fallen, right? He actually put a name to this as Australia Has Fallen. And it just rings the bells. The dictatorship and the governors of the state and that making decisions that no, we don't have a say at all. So, freedom of speech is way out of the window. And again, before we'll move on to the next question, I've said this before, I'm walking in the city of Adelaide. It's only a tiny city, or the capital of South Australia, 1.3 million, so it's not big. But you go down the arcades and 1/3 of them are closed. So these small businesses are really feeling the effect of lockdowns. So my question is really, John, the economic impact of the current lockdown has fallen harshly on millions of Australians in New South Wales, Victoria especially, on the small business community. John, can you describe the economic fallout from the current lockdown? What do you anticipate happening with the Australian economy and business community in the coming months?
One point I'll make is that so a lot of people have not had what I would call strong cash flow management. One of the points I made in an article back in 2018 about preparing for economic Armageddon was not only about getting out of debt and holding sound money like gold and silver, but it was also about having good, strong cash flow management. So understanding what obligations you've got coming up, obviously trying to anticipate those obligations, putting money aside, prepaying obligations where you can, just so that if things were disrupted, you're not going to fall in a heap. And so with the current lockdown, a whole host of households and small business people and even medium-sized companies, they have fallen into immense cash flow difficulty because they haven't been able to generate an income, and there's an expectation that they continue to pay all of their outgoings. And a lot of people, as I said before, don't have a buffer. And one of the reasons why they don't have a buffer is because we have the biggest debt bubble in the country's history. So there are a lot of people. Now, what I should say is the state government and the federal government has provided a level of financial support. That level of support has been late in terms of its time in coming to the party, but also it's been a fraction of what it was last year with JobKeeper. So while a lot of businesses were able to keep their head above water in 2020, 2021, I think it's going to be a very different story. And I've already hearing stories of companies going into insolvency and companies winding up. And dare I say that I think as we go forward, we're going to see more of those examples, more of those sort of examples happening. So I do expect that New South Wales and Victoria, particularly New South Wales, that it's going to take a while for the economy to recover. Even if you look at, for example, Martin North's from Digital Finance Analytics, his mortgage stress and rental stress. Mortgage stress, I think from memory, is about 45% in New South Wales, and rental stress is about 50%. So there's half the population who are struggling to pay their bills. And obviously that leads into a whole host of mental health, emotional, psychological problems. And those problems will continue because the lockdown continues. So now a couple of important points is, I think the biggest point for the economy and for the business community is uncertainty. I mean, we keep on having, particularly in New South Wales, the government keeps on changing the rules. They keep on changing in terms of some of these restrictions, their timelines. They keep on saying we're following the health advice. The virus is moving in different anticipated ways, so we have to adjust as the virus adjusts. But that causes enormous problems with people trying to plan in terms of when that potentially can open up, in terms of holding on staff, in terms of being able to pay all sorts of leases and for a commercial property, and in terms of equipment, etc. So that uncertainty is going to be very difficult, I think, going forward. In terms of New South Wales, the Chief Health Officer, Dr. Chant, was asked in the last week about will we ever go back to pre-pandemic Australia, and her view was that we wouldn't. The Premier has said that this situation with Delta could last for another 4 years, particularly if new variants were to come into Australia. And they did say that, while there's a plan to open up the economy when certain vaccination targets are achieved, the government reserves the right to take either the whole state or parts of the state back into lockdown if there are outbreaks. And we are seeing in Israel, in the United Kingdom, with some of the highest vaccination rates in the world, that you can see very dramatic outbreaks of cases, and that is resulting in countries going back into lockdown. So while there's a lot of people who are hoping that we're going to get out of this relatively soon, it seems to me that the economic damage is going to continue. And while in the last 12 months we've been talking about the damage from last year in terms of the amount of money printing, in terms of the amount of in terms of government spending that we saw from the federal government and all the state and territorial governments in 2020, this whole new outbreak of Delta, and the immense cost of testing in terms of vaccines, in terms of providing financial support, it has just burned massive new holes in our public sector finances. And the real question is, can we ever get out of this? And the evidence to date is, I don't think we can.
Really, to summarise, well, you said it so very well, and I would think to summarise all of this is that, the people ask the governments to help out, to help private businesses, and I think that's a good question or a good statement, but we've got to come to the conclusion that in a lockdown, the government can print as much money as they like, but it doesn't produce any goods. The problem is the production of goods and services. So you can print as much money as you like, but there's still going to be that massive problem ahead of us. So it's not a matter of government helping out. It's a matter of government not getting involved as much as they are and letting business produce what they have to produce. Darryl?
Mm-hmm. Couldn't agree more. John, many Australians have been shocked, and I repeat that, shocked as to how our freedoms have been taken away by our politicians so quickly and at such extravagant expense. Unfortunately, what many Australians have failed to understand is that this occurrence has been driven by our fiat currency system and the manipulation of precious metals. John, can you explain how our Australia's monetary system is at the heart of the horror that we are witnessing?
When you look at governments who get out of control, and history is full of governments that go into extreme policies, someone obviously has to pay, particularly when the government is running a large deficit like we are now. And the question is, where is that money coming from? So some of the money is, some of the financing is being offered by domestic investors, but also international investors who are willing to buy some of these government bonds. But to a large extent, it's being printed by the Reserve Bank of Australia and other central banks, and they are buying a significant proportion of in terms of government debt. So I think we're going to, by the end of this QE program, assuming we stick to the current timetable that we'll talk about soon, the 35% of all federal government debt could be owned by the RBA, and I think it may be about close to 20% of state government debt could be owned by the Reserve Bank of Australia. So the only way that this lockdown and the loss of our rights could be possible is because we have central banks printing enormous sums of money, using that money to basically buy government bonds at elevated prices, pushing down the interest costs to the governments. And while that can continue for a short amount of time, the chicken's going to come home to roost in terms of inflation down the track. But obviously, if we had a gold standard, a silver standard, if precious metals were fairly valued, the market would basically impose market pressure on governments that they wouldn't be able to just print currency willy-nilly and just spend it like drunken sailors that we are now. So sometimes people try to say to me, well, what's the big picture? So the big picture, particularly as we go forward with the economy, is that with the biggest debt bubble in the history of the country, we can never normalize policy, because if we tried to normalize policy, the house of cards would fall. And so they have to keep on injecting more debt into the system. And how do they do that? They do it by printing more money, getting governments to spend that money. We've probably racked up about, with this COVID response, more than $1 trillion of new public sector debt in this country. And a lot of this is being financed by our monetary system. And so, one of the important ways, if Australians are thinking, well, how can we ensure that government doesn't get out of control into the future? While you can change the constitution, you can change laws in parliament, you can potentially do things with the courts. You always, from an economic point of view, you've got to look at the financing of these activities. And it goes to the heart of the fact that the Australian dollar is unbacked. It's controlled by the RBA. There's no limitations as to how much they can print. The inflation data coming out of the Australian Bureau of Statistics is manipulated to a lower rate. So the actual inflation rate is much higher compared to what the government's willing to admit to, and that's the essence of our economic dilemma, that we have a structurally flawed monetary system that's giving these politicians the ability to do what they're doing at the moment.
It's interesting, isn't it? I think people generally tend to think, not everyone, but a lot of people tend to think that governments have unlimited resources. And unlike ourselves, of course, a conventional business, you end up with too much debt, you go broke. And there is a tendency to think that could never ever happen to a government. But the same thing has happened to governments over and over and over again, which is why fiat currencies have, over a 5,000-year period, 3,800 fiat currencies have all gone to zero. Because the governments, no one learns from history, or certainly governments don't learn from history. They think that they're smarter and they can do it a little differently, but no one's succeeded yet. So we all need to understand that there is a limit to how much they can print before you go into a hyperinflationary phase. And that's, of course, where gold and silver prevail. Yeah. That's when nothing else counts for anything. That's when the streets are full of paper currency, and it's just being thrown away and shoveled down the drains. So that's where we're heading at the moment. It seems extreme, but quite clearly, that's what we're confronted with at the moment.
Yeah. While Darryl was talking there, it reminded me of the story of in the Weimar Republic in Germany in 1920, 1922. The wheelbarrow of money sitting out the side of I think it was a butcher shop. It was some sort of a shop, a wheelbarrow absolutely loaded with money. And when the owner of that money came out, because had to go into the shop, the wheelbarrow was gone and the cash was left on the footpath. So what had more asset value was the wheelbarrow. Yeah. So my next question, John, is really the Reserve Bank of Australia. I will speak about make a comment on the debt after your answer. But earlier this week, the Governor of the Reserve Bank of Australia gave a speech about the Australian economy and how it is coping with the outbreak of the Delta virus. What are the key takeaways from the Governor's speech which ordinary Australians should be aware of?
First thing the Governor obviously said is that New South Wales in particular, the level of, and we are the biggest economy inside Australia, we are basically in contraction, and so lockdowns do have a significant impact in terms of the ability to generate economic growth. Interestingly, some of the other states have actually picked up growth, say, including Victoria. So even though there's been some restrictions on Victoria, they have been able to be quite buoyant, particularly I think in the construction sector. Whereas obviously WA continues to roar on with mining and construction and a few other industries over there. So the impact at the national level hasn't been as severe because other states have been able to pick up the slack. But obviously. So we've obviously documented in previous conversations how the RBA is engaged in very extreme monetary settings in terms of interest rates at 0.1%, quantitative easing at $5 billion a week in terms of buying, in terms of yield curve control, in terms of the bond that matures in April of 2024 being locked at 0.1%. And all of these measures were designed to provide cheap financing to banks, but also cheap financing to government. So the question was always, well, will we ever get back to normal? Now, there was a plan that was put out by the RBA at a previous board meeting to show that there would be some form of normalization, that it was anticipated that QE would end at in November of this year, and that by 2024, once inflation starts to get between 2 and 3%, interest rates would start to go up once we finally come to a conclusion of QE. Now, with the outbreak of Delta, that's given the RBA a new excuse to continue to print. So they have said that they are going to taper their printing. So up until this point, it's been printing at $5 billion a week. Now in September, in terms of this month, they said they were going to reduce their purchases to $4 billion, and that they would be purchasing between now through to November. Well, they've now extended that amount of additional money printing at $4 billion a week. Rather than November, it'll be through to at least February of next year. So they've kicked the timeline down the road, and obviously that means that they can easily now kick the time frame as to when they're going to raise interest rates. So now there are those out there like myself, Peter Schiff and others, who believe we are experiencing stagflation, and that stagflation is going to get worse. Well, stagflation will occur and intensify when central banks can't normalize policy, and that the stimulus that we've had to date really runs through the economy. So I think even though there's been a massive amount of money printing that has happened to date, some of that money printing it hasn't flowed through to the economy because we are in lockdown. So I think if we can get out of lockdown, if we can stay out of lockdown, I think we're going to see quite a bit of inflation start to manifest right throughout Australia, whether that's picked up in the CPI or not. And obviously we've got a commitment that we're going to continue to print or print money on a quantitative easing for longer. So that doesn't bode well in terms of a sound currency moving forward. And again, so the question is, can we ever normalize? So I mean, obviously, in terms of the lockdown pandemic, can we ever go back to the pre-pandemic world? Well, the other question about pre-pandemic is, will we ever take interest rates, will we ever take fiscal policy back to where it was prior? And the reality is we can't, because the amount of new debt that has been incurred in the last 18 months has been incurred at ridiculously low interest rates by governments and corporations and households. And a lot of those people, even if the economy is fully opened up, they would struggle to repay that amount of money if interest rates were to go up. So, while we see, maybe some households could absorb another 1%, like maybe 0.5% to 1%, but there'd at least be 10 to 20% of the economy that, because they are so levered up, if rates were to go up, 1%, 1.5%, they would struggle to make their repayments. Noting that even at these record low interest rates, we've got record mortgage stress and record rental stress according to Martin North. So, how do we get out of this economically? There is no plan by the federal government or the state governments to repay any of this debt. No journalist is willing to ask the RBA, how do we ever shrink the balance sheet? How do we ever sort of take interest rates back to some sort of normal level? And normal would be in the order of 4 to 5%. We can't. So we're stuck, and we keep on playing this game of charades where we keep on coming up with new excuses as to why we can never go back to the way it was in terms of economic policy. And that will obviously, at some point, the public will wake up to the charade and will realize that we have runaway inflation. And for those who are unprepared for that inflation, when it really manifests itself in ordinary goods and services, that's when living standards will be under enormous pressure. And when we say enormous pressure, in Venezuela, people are struggling to eat. Even in Lebanon now, who's going through hyperinflation. In Lebanon, poor people can't eat. Poor people can't get access to basic medical services. Obviously, in terms of things like fuel and transportation, people are struggling. So cost of living is a huge problem in this country, and that's going to get worse as we go forward, because the only way to fix it is a depression. The only way to fix it is to shrink this debt bubble. Governments and bureaucrats have said, they won't allow that to happen because of not only the economic repercussions in their view, but also the political repercussions. So we are stuck on a pathway of intensified stagflation, and if our international creditors lose confidence in our economic settings, it could lead to a collapse of the Australian dollar and lead to runaway and hyperinflation.
A takeaway from all of this, John, is that you can't print your way out of the problem. I did some figures just recently, and in fact yesterday I was working on them, and I've mentioned these sorts of things before, but this is the latest figures, and basically debt to GDP, and I've just looked at Australia, America, the UK. Once we get over debt to GDP, and we're talking external debt, we're not talking local debt or federal debt, we're talking external debt. So we have here in Australia, well, let's start with the US, 28 trillion, 28.7 trillion debt. It's 140% debt to GDP, 140. Now, I go back about a year and a bit ago, before Corona, and it was always around about the 95 to 100 mark. Now it's 140. The UK debt, 3.6 trillion, 325% debt to GDP. Then we come to Australia. It sounds small, but we have a small economy. 0.7 of a trillion, or 700 billion debt to GDP. But it's 160% of debt to GDP. Once you hit over 90, I know the economists out there, world economists are saying it's no return from there once you hit over 90%.
Correct.
So I always come to the conclusion, maybe you can enlighten me, John, that if we can print this so much money, why do we pay taxes? I mean, why can't they just print them? And don't worry about paying taxes, just print.
Well, I mean,
Because
the
it
thing is
doesn't.
that, if we had no tax and we just printed, inflation would be a lot higher and a lot sooner than otherwise is the case. And our economy would fall in a tailspin like it would happen at a much more rapid rate. So that's why we can't. But again, I mean, people have been completely misguided about the economy. People think when the house prices go up, and house prices in the last 18 months in certain markets, particularly in Sydney, have been going up aggressively. Your house is not worth more. The value of your money is going down. So the land is the land, the house is the house, and it just takes more dollars to buy that house or that land because the currency is being devalued. And so whether it is the rising price of gold or silver or real estate or the share market, I mean, these are clear examples of inflation driven by central bank policy. So people feel rich, but I think more and more Australians are waking up to the fact that the level of debt that people are in and the level of prices, that it's not normal, it's not healthy, and that it's not a function of a prosperous country, but there is something else going on. So I think there are more Australians waking up to that message, and obviously the important work that we do here at As Good as Gold through these videos and seminars and articles is that we're trying to continue to waking up the population before the eventual currency collapse is to occur if we continue along the path we're continuing.
Yeah.
Well, talking about printing money, this week, and I think this is big, and I'm really interested in John's comments on this because this could cause the absolute collapse of the House of Cards. This week we saw China's largest property developer. These guys are really big time, Evergrande, with liabilities approximately 305 billion US, right? Okay. Run into serious financial trouble as they face a liquidity crunch. Shares in the company have collapsed by 80%, and investors have stormed the company headquarters, demanding the money back. Some have jumped on the news and are claiming that it's China's Lehman moment. Now, I'd really like your assessment on this, John, but I see it as a serious debacle, and I don't think it matters which way the Chinese government turns here, whether they confront it head on and just say, we're not going to do this anymore, we're not going to finance you anymore, because then of course, there's a whole string of other companies in similar positions to Evergrande that they'd have to support. They've either got to support them or they don't. If they don't, then the House of Cards collapses and a lot of people lose a lot of money. If they do support them, for how much longer could they do that? We're talking about hundreds of billions of dollars that the government would continue to have to continue to inject into the company's coffers. Your thoughts on this, John, and what the ramifications might be?
I mean, while in the last few years we've talked about a global debt bubble, I mean, the largest one is actually in terms of China. So the rise of China, both as an economic and military power, has been financed through debt and huge amounts of debt. So no economy in the world is sustainable. Obviously, in the Australian context, we've talked about largely household debt, a mixture of foreign debt and now public sector debt with the pandemic. But the Chinese have a huge problem with in terms of household debt, in terms of particularly local government debt and corporate debt. And a lot of this has been financing this huge urbanization strategy that the Communist Party has been implementing. So it is true that if Evergrande were to collapse, holus bolus, it could bring down the entire Chinese economy, and it would have massive repercussions for the world economy as well. And in terms of Australia, we wouldn't survive that situation. We wouldn't survive it in the sense that iron ore sales, iron ore prices would go through the floor. So that would mean that our mining sector would basically go into recession. Western Australia would be in an awful mess, and obviously the finances of the Western Australian government would be completely exposed. But then obviously in terms of when the economy opens back up, we will be expecting tourists to come into Australia. We'll be expecting foreign students coming back in. All of that economic activity potentially could go south if Evergrande were to collapse as well. But also it would have huge political ramifications inside China. I mean the scenes. I mean Australians are not accustomed to storming the headquarters of a corporation when they lose money, but the Chinese do this all the time. So. I mean, I saw some very dramatic footage over the last 24 hours where people are. We're not talking wealthy people. We're talking about ordinary mums and dad investors. So while Evergrande is a large property developer, they have also been selling financial products into the Chinese retail investor market. And a lot of mum and dad investors have bought into a number of these in terms of these wealth management products. So if people lose their life savings in these products or lose their properties that are still under construction, the amount of social and political chaos could be quite extreme. Now, one of the big differences in the Western world versus China is in China, the Communist Party controls all facets of not only the political system but the economy, and the whole objective of the CCP is to retain power. So I think they fully are cognizant that if Evergrande were to fully collapse, that could the backlash from the public with a collapsing economy could put the risk of the CCP's power in jeopardy, and that's why I don't expect a full-scale financial crisis to occur. So I think in the last few days, Evergrande has appointed some financial advisors who have expertise in restructuring. There will be some investors who will lose some money. We'll have to see how that all plays out. Importantly, there is some important milestones next week in terms of Evergrande paying a interest coupon to investors. Beijing has already said that payment would not be forthcoming, so they will be technically in default, but there will be some form of restructuring, and it looks like that foreign investors in particular will suffer more of the losses compared to domestic Chinese investors. So they'll move heaven and earth to continue to keep the company afloat, and that will obviously come at a cost in terms of the People's Bank of China printing more money, in terms of the central bank, in terms of the central government in China providing more funds, but also in terms of some of the local governments injecting more capital into the company as well. So how much capital will they have to inject? We'll have to see, but I do expect them to keep Evergrande afloat in some restructured form. But I think this whole episode of the last fortnight has exposed how big and how wieldy this Chinese debt bubble is, and if it were to ever collapse, we would it would be the largest corporate collapse in the world, and it could well be that we see not only a full-scale depression in China, but that cascades right through the financial system, and the entire system is coming to its knees. So again, I mean that's why, with all of these systemic risks, not only in terms of Australia and in terms of New South Wales and Victoria, but the global economy. I mean, while I've taken precautions to insulate myself, and Darryl and Brian, I know that you've taken steps over the last couple of decades to make sure that you and your families are safe from financial risk or disruption to the economy of the financial markets. People need to be aware of the context in which we're living in, and people need to take a whole host of deliberate financial steps to make sure that if the worst case scenario were to occur, that they would be in a position that they would be able to withstand that pressure. And to date, during COVID-19 in 2020 and 2021, I think the three of us have been able to withstand that pressure, whereas a lot of Australians so far have not. Well, if Evergrande were to pancake, the pressure, the economic pressure of that event would far outweigh anything that we've experienced to date from these COVID-19 restrictions, including the lockdowns. So people need to be fully awake to what's going on, fully awake to the risks, and people need to take deliberate action to ensure that, hope for the best, prepare for the worst. But if the worst does come, people need to, they need to make sure that they can survive and that they can prosper on the other side.
Yes. No, sound words, John. And I agree. There's so much uncertainty out there at the moment that gold and silver, more than ever before, if you have gold and silver, you're in a position of strength, and you can divorce yourself pretty much from all of this uncertainty that's out there. But I just want to share this with everybody. I want to go back to the illustration I give on gold versus real estate. Because every time I share this with somebody, they say, wow, I never ever saw it that way. But we need to, because it's how it is. The illustration is this, and I'm basing it on the fact that gold over the last 20 years, since 2000, through till now, 2021, has averaged a return of 27.1% per annum. Average 27.1% per annum. So, illustration, you've got $500,000. Some people will say, well, I don't have $500,000. Well, call it 50,000, whatever the number is. But I'm comparing it to real estate. I know a lot of people invest $500,000 into a property, and they may have many of those properties. So, you've got $500,000, you leave it there for 5 years. You buy gold, $500,000, and you leave it there for 5 years. At 20% increase per annum, you've got $1 million at the end of that 5 year period. You could liquidate at that point at 20% per annum, infinitum, and you would have more in your account. The balance in your account would be more than it was at the beginning of the year each year after that. What a wonderful retirement, Brian. $200,000 a year. You could have done that for the last 20 years based on the returns that gold has provided. So no one understands that. No one understands gold. Why do they not understand gold? Because no one talks about it on mainstream media, but they're talking real estate all the time. By the way, if you had a real estate investment, you invested $500,000 and over a 5 year period, it appreciated and was worth $1 million. I know $1 million property at the moment, if you rented it out, it was an investment property, your return on that would be around $40,000 a year before outgoings. So you'd be looking at somewhere around $25,000 to $30,000 a year in the pocket, compared to $200,000 a year.
With no expenses.
No expenses. Just put it under the bed and leave it there, and bring it out with $200,000 a year return on it. Fantastic. Just in closing, got to say, Egon von Greyerz is right. He's always been right, and Egon has said time and time again, if someone asks him the question, how much should I invest in precious metals? His answer, very simple. As much as you can, invest as much as you cannot afford to lose. If you can afford to lose $50,000, that's fine. Don't invest it. But whatever you can't afford to lose, that's what you should put into precious metals. Jim Sinclair, of course. Brian and I are a great fan of Jim Sinclair, and he would talk about doing what the central banks do. The central banks of the world all own gold. Why is that? You've got to ask yourself the question, why do they own gold? Because it protects their position. It protects their currency. They can back their currency in a time of absolute need. Otherwise, their currency is worth nothing in terms of hyperinflation or in times of hyperinflation. So become your own central bank. own gold and silver so that you have the position of power and strength. Governments do not want you to own gold. They know that they require it, but they don't want you to have it because it gives you power and control.
May I also say something, Darryl? I mean, in the earlier part of the conversation, I talked about a TV program, and he called it "Australia Has Fallen." And from what you just said, John, with everything you've said today, I wrote down something that I think is very imminent. And it says, we're getting close to the last nail in the coffin. If we don't change where we're going, if we don't change from fiat currency to gold-backed currency, that last nail in the coffin is getting very close.
I'd agree. Reciting the words, Brian, of the one and only Peter Daniels, I do not care what poorly executed economic decisions are made in the world tonight. Tomorrow, I will still be able to party. So if you've got gold, doesn't matter what happens. A lot of people will get hurt, but you'll be in a position where you'll be able to assist and help them. But you've got to be in a position first where you're in control.
That's right.
And Peter Daniels' comments are extremely valid. John, just if you would like, closing comments, if there's anything you would like to add to the presentation today, please, you have the floor.
The only thing I'll say is that if our viewers in Australia or overseas, if they're not happy with the direction in which your country is going, particularly if we've got viewers from the United States, I mean, the only thing you can do is to get involved in the political system, in the economic system. Now is not the time to be a spectator. Now is the time to stand up and protect rights that took centuries and enormous bloodshed to establish. I'm definitely up for the fight. I definitely don't want what we're going through at the moment to be around for in terms of my daughters and even the possibility of these policies going forward. So I think there's a couple of important messages. One is about the freedom-loving people need to come together to ensure that these policies don't that they go away in the short term and they don't come back in the long term. But obviously, there are enormous immediate and local as well as global risks in terms of the economy and the financial markets, and people cannot wait to take precautions. If you can take action because the fragilities of the system are being exposed, or have been exposed over the last few weeks. And while they may be able to put some band-aids on the situation now, there'll be at some point soon that they won't be able to put they won't be able to put the genie back in the bottle. And when that happens, you want to make sure that you and your family are set up to, again, the first instinct is survival. But then once you survive the initial onslaught, you can actually, operate normally and prosper on the other end. And that's the whole message of why I started this 5 years ago, and while I'm still with As Good as Gold, and why we continue to do important work going forward.
Thanks, John. No, appreciate the comments. Thank you again, John. John's been a wonderful support for As Good as Gold Australia. As I keep saying, wonderfully researched, one of the finest economists in the country. And we just happen to be fortunate enough to have John working side by side with us, which is fantastic. I'd also like to thank our viewers and subscribers who continue to support this channel. Very much appreciated. And I guess until next time, stay well, stay focused, and goodbye for now.
And goodbye for now.